My fellow Americans, this is Liberation Day. We are finally putting America first. Starting tomorrow, the United States will implement reciprocal tariffs on other nations. We will establish a minimum baseline tariff of 10%. China, 67%. That's tariffs charged to the USA. We're going to be charging a discounted reciprocal tariff of 34%. You think of European Union, very friendly. They rip us off. 39%. We're going to charge them 20%. These tariffs are going to give us growth like you haven't seen before, and it'll be something very special.
Donald Trump spoke of being lenient while announcing tariffs. Now, if these were lenient, we would only wonder how would that be had they been aggressive. You're watching Power Breakfast this morning on CNBC TV 18 live from the Mumbai News Center. I'm Hormas Fatakia. With me today is Mangalam Malu, and these are the headlines we are tracking this morning.
April 2nd, 2025 will forever be remembered as the day American industry was reborn, the day America's destiny was reclaimed.
U.S. President Donald Trump unleashes a barrage of reciprocal tariffs to match duties put on the U.S. goods by other countries. A 10% baseline tariff on all imports to the United States will come into effect from the 5th of April, and higher duties on some of the country's biggest trading partners has been imposed effective the 9th of April.
The Trump administration imposes a 34% additional tariff on top of existing levies on China, while European Union has been taxed by 20% and India by 26% import duties. Mexico and Canada, two of the United States' biggest trading partners, have been exempt from any new tariffs.
Global markets in a sharp risk-off mode after Trump unveiled sweeping tariffs impacting 185 nations. The U.S. stock futures tumbled sharply, with the Dow futures down nearly 1,100 points.
Asian markets have plunged as well this morning, with the Japan's Nikkei tumbling over 4%, while South Korean indices have dropped over 2% after Trump's tariff announcements. The GIFT Nifty is indicating a gap down start of nearly 400 points for the Indian markets.
On account of all this uncertainty, gold prices have soared to a record high above $3,160 per ounce after Trump's tariffs rattle markets. Oil prices, on the other hand, fall on concerns that a global trade war may dampen the demand for crude. Well, it's a Thursday morning. We come to you live from the CNBC TV 18 Motilal Oswal studio, and it's a big Trump-size hole that the market's bracing itself for at the open itself. And the biggest reason for that, the US President Donald Trump has announced reciprocal tariffs, the baseline tariff of 10% on all countries effective 5th of April. Donald Trump said he's been kind to the countries by charging them roughly half of what they charge the United States. Calling these as discounted reciprocal tariffs, President Trump did say that the US will charge an import duty of 26% on India and 34% on China. A 25% tariff is being announced on automobile imports and auto parts, while the previously worried pharma sector remains exempted for now, bringing in a sigh of relief for some of the drug makers. Markets across the globe reacted sharply to the announcement, with Dow futures falling over 1,100 points. The Nikkei itself this morning, the Japanese index, fell by over 4%. The South Korean index declined by nearly 2% as well, and as a result of which the GIFT Nifty itself is indicating a cut of 400 points at open itself. So let's listen into the key announcements made by the US President in his speech around tariffs.
My fellow Americans, this is Liberation Day, waiting for a long time. April 2nd, 2025 will forever be remembered as the day American industry was reborn, the day America's destiny was reclaimed, and the day that we began to make America wealthy again. We're going to make it wealthy, good and wealthy. For these reasons, starting tomorrow, the United States will implement reciprocal tariffs on other nations. It's been a long time since we even thought of that. We used to think about it a lot. We didn't think about it for many decades, and you see what's happened. For nations that treat us badly, we will calculate the combined rate of all their tariffs, non-monetary barriers, and other forms of cheating. And because we are being very kind, we're kind people, very kind. But we will charge them approximately half of what they are and have been charging us. So the tariffs will be not a full reciprocal. I could have done that, yes, but it would have been tough for a lot of countries who didn't want to do that. Not a full reciprocal. I could have done that, yes, but it would have been tough for a lot of countries who didn't want to do that. So if you look at that, China, first row, China, 67%. That's tariffs charged to the USA, including currency manipulation and trade barriers. And so we're going to be charging a discounted reciprocal tariff of 34%. I think, in other words, they charge us, we charge them less. So how can anybody be upset? They will be, because we never charge anybody anything. But now we're going to charge. You know, you think of European Union, very friendly. They rip us off. It's so sad to see. It's so pathetic. 39%, we're going to charge them 20%. So we're charging them essentially half.
And as Donald Trump unveiled a flurry of tariffs, starting with a base tariff of 10% across the board, CNBC's Eamon Javers details the tariffs imposed on various countries.
President Trump announcing 10% across-the-board tariffs. He's calling those reciprocal tariffs on all countries in the world. And then a select group of about 60 countries are getting additional tariffs based on their tariff history against the United States. You read off some of the highlights, 20% for the European Union, 46% for Vietnam, 32% for Taiwan, 24% for Japan, 26% for India, and the list goes on. Significant tariff increases now for a lot of countries in your neck of the woods. And the president has said that the United States feels it has been taken advantage of in recent years and decades. He wants to do something about it. And the question now is, how permanent will these tariff rates be? Does this imply that all of these countries can now enter into negotiations with the United States in order to lower their tariff rates going forward? Or does the president envision this as a more permanent state of affairs to rearrange global trade and to bring in revenue to the U.S. Treasury? One of the things the president said in the in the Rose Garden earlier today is that he's going to get billions of dollars in additional revenue to help offset his tax cut plans for later in the year. So that suggested to me that we might be talking about something the president sees as permanent and not something the president sees as negotiable in the short term. But we'll see.
Countries like Canada, you know, we subsidize a lot of countries and keep them going and keep them in business. In the case of Mexico, it's $300 billion a year. In the case of Canada, it's close to $200 billion a year. And I say, why are we doing this? Why are we doing this? I mean, at what point do we say you got to work for yourselves, and you got to, this is why we have the big deficits. This is why we have that amount of debt that's been placed on our heads over the last number of years, and we're really not taking it anymore. But such horrendous imbalances have devastated our industrial base and put our national security at risk. I don't blame these other countries at all for this calamity. I blame former presidents and past leaders who weren't doing their job. They let it happen, and they let it happen to an extent that nobody can even believe. That's why, effective at midnight, we will impose a 25% tariff on all foreign-made automobiles.
What happens to the likely effects of these reciprocal tariffs? Well, it could begin a trade war, or could it rearrange the global trading mechanism itself? How does it play out domestically in the US, and what does it do to their own inflation? We have a bunch of expertise coming in. CNBC's Steve Leisman takes a look at the tariff effect, more importantly, on US's own domestic economy.
I think it's worse. I don't know what the average tariff is. Maybe we could just pull up. I asked him to make a board on Canada, the EU, Mexico, and China. Those are the principal sources of our imports. So that's the stuff that matters. I think it's over 20%, if I'm not mistaken. So a good chunk of all of our imports will have a tariff over 20%, I believe. And by the way, yeah, you see that big one on China, which I think is actually 54 because it's 34, I believe, plus 20. In any event, people modeled in 20%, and they were detracting from GDP. They were adding to the CPI. This just seems like the president having his own sort of school of economics that's different from everybody else. And he said that the economists were all wrong, but in fact, they would insist they were absolutely right. Here's a comment from the Cato Institute, which, as you know, is very conservative. They said, quote, "These so-called reciprocal tariffs don't mirror foreign trade barriers and ignore those imposed by the United States. For all of President Trump's talk of a new golden age, this huge tax increase will inevitably result in higher prices for American families, lower growth and business investment, and diminish exports and manufacturing output." So it is not a good forecast or a good look from the economists and the forecasters. And as you can see from Wall Street on these tariffs here, the president believes this will lead to a golden age of growth and increase in manufacturing. Economists believe it will lead to lower growth and higher inflation, and really puts the Fed in a pickle here. You can see that there was something of a bump, however, in the probabilities of Fed rate cuts, and I think that comes from a view of greater economic weakness, and they believe that it will be so great, I think, that the Fed will be forced to ignore the surge in inflation. There are the probabilities a touch higher than they have been. That December number for the third cut had been as low as 60, even 50%. But now that he's very serious about these tariffs, you have the market saying, hey, the Fed's going to cut 3 times because I believe not that the inflation is going to be low, but that the economy is going to be that bad.
And the impact of all of this has been felt across markets globally, and the US markets too. They ended higher in regular trading, but as Donald Trump made his tariff announcements, futures on Wall Street cratered as these sweeping tariffs were announced by Donald Trump, and the Dow futures were down as much as 1,100 points. The Nasdaq futures are down 4.5%. S&P 500 futures are also down 3.5%, and that's because there is a risk of a trade war that is rising now, and this is being felt on the US futures as well. And the Asian markets too have opened with sharp cuts this morning. The Taiwanese index, mind you, is shut for trading in today's session, but if you could see, there is red across the screen. The Nikkei in Japan is down almost 3.25%. The Hang Seng is down 2.5%. As you can see, the Shanghai Composite 2 is trading with losses of 1%. The Kospi in South Korea too is trading with losses of a similar quantum. And as you can see, now if you pull up the GIFT Nifty as well, and that will give you an idea. It's a slight improvement from the earlier ticks, which was pointing to a 400-point gap down, and it's currently implied open suggesting a 300-point gap down for our own markets. And the Chinese markets will also be in focus because the new reciprocal rate on China will be added to the existing tariffs, totaling to 20%, which means that the true tariff rate on Beijing under this Trump term is 54%. And that impact is also being felt on the Hang Seng, as we just mentioned, is down 2.5% in early trading. We take a short break here on Power Breakfast. Up next, we get you more updates on Trump's tariff plans and its likely impact on the global markets. Stay tuned. Back on the other side.
Welcome back. You're watching us here on Power Breakfast on CNBC TV 18, a special edition, as there has been a big development overnight with the US President Donald Trump unleashing a barrage of reciprocal tariffs to match duties put on the US goods by other countries as well. The key highlight of that, a 10% baseline tariff on all imports to the United States, which will come into effect from the 5th of April, and higher duties on some of the country's biggest trading partners. It's been effective the 9th of April. The question: how much revenue are the new reciprocal tariffs likely to bring into the US, and what could the impact of that on their economy be? CNBC's Steve Leisman takes a look at those numbers.
President Trump's economic advisors have said the tariffs could bring in as much as $600 billion a year, but the Nonpartisan Tax Foundation believes it could be half of that. What economists say cuts into tariff revenues are a decline in imports, because if you tax it, you'll get less of it, lower returns to capital and labor, as well as lower GDP. Erica York from the Tax Foundation says the $600 billion estimate from the administration, assuming a 20% tariff on all imports, could be more like $300 billion in revenue, and that's before the effects of retaliation. York told me the White House tariff revenue numbers are not realistic. They missed that imports would fall and that tariff payments would shrink the income and payroll tax basis, both of which significantly reduce the expected revenue tariffs will yield. Already, several forecasters have downgraded U.S. GDP forecasts because of the coming tariffs. Goldman says it would be a 0.4% hit to GDP and wrote this week the fiscal package is unlikely to offset the GDP hit from the tariffs. The White House has said that tariffs are tax cuts, but because they're believed to be mostly paid by U.S. businesses and consumers, economists treat them and score them like tax hikes. Steve Leisman, CNBC Business News.
And let us also now listen into some expert reactions that are coming in on Donald Trump's tariff announcements and its impact on the U.S. economy.
I think my baseline is that this is the opening round of what may be a very complex set of negotiations across scores of different countries. So I think maybe, as Secretary Bessent has been quoted, it maybe puts a cap on max tariffs. But I think there's a long way to go to see how the tariff war is going to eventually be settled. I think there's definitely a headwind, Sarah, from the trade policy uncertainty. We saw evidence of that back in 2019. There's much more uncertainty now. So companies are not eager to invest or hire, so long, especially if they're exposed to trade. And so I think it's a headwind to growth. A recession would not be my baseline, but you'd have to say that the odds of a recession have gone up compared to where we would have been 3 or 4 months ago, just from really the uncertainty effect on consumers and businesses in and of itself.
This was stronger than what many of us expected. But it's, it's the opening step. So I would expect, I would assume that this will not be in place in a month, 2 months, definitely not in the back half of the year. So I'm in the camp that this is the beginning of a big negotiation. Korea and Japan don't charge tariffs for automobiles anymore. So Mexico and Canada will most likely be addressed with the USMCA agreement. That's scheduled for 26, but that will be brought forward, hopefully in the next month or two. And that the autos will be folded into that discussion. Germany, it's about, they charge us 10%. We charge them 2.5%. That could be fixed.
So this is a broad-based, all-out assault by Trump on the notion of free trade that was supposed to benefit the U.S. and the rest of the world. And it is striking that this is such a broad swath of tariffs encompassing a wide variety of products, and it doesn't discriminate between U.S. allies and rivals. It hits everybody pretty hard, and countries in Asia in particular seem to be hit quite hard. But there are many countries around the world, even those like the United Kingdom, with which the United States runs a trade surplus, that have gotten hit with some tariffs. So nobody really has been spared. Mexico and Canada seem to have gotten off lightly on this round at least, because it seems like there are no additional tariffs being imposed on them.
I think that, up until now, what we had, were the skirmishes between the administration and Canada, Mexico, China, Europe. And then today is when the war actually began. The global trade war starts today. And I was really struck by, pundits and strategists and economists and analysts all saying, well, today was going to be the day, that at least the uncertainty is going to end today. But no, the uncertainty didn't end today. All we know is that it was the official day of the trade war, the global trade war. And now we're going to go through a multi-month or multi-quarter period of the law of unintended consequences. And so we're going to be writing fresh chapters in this book on making uncertainty great again. Everybody talks about, the breath of fresh air, that it's a 10% baseline tariff. That's the baseline. The average tariff rate just went from 2.5% to 20%.
Right, that's about the US markets, the expertise. What we'll do is we'll take a short break and tell you how these overnight cues are likely to impact the Indian market. For starters, we have the Gift Nifty, which is indicating a 400-point downtick. But will that gap down mark a bit of a bottom? Will we see recovery from that? Can India outperform this uncertainty, or will we fall after the global weakness? All those cues coming up right after this short break. Welcome back. You're watching us here on Power Breakfast on CNBC TV 18. In case you've just tuned in, pull up the GIFT Nifty for you. It's a 400-point gap down that we're expecting at this point, which is now actually narrowed down to about 261 points itself. Trump had announced a barrage of tariffs overnight, because of which the global markets are facing that big a hole, which is a Trump-sized hole itself. The Asian markets as well. The Taiwanese index is shut today. You have the Nikkei and the Kospi coming up for you. Both of them under a wee bit of pressure. The Hang Seng down about 1.7%. Let's pull up the Kospi or, the Taiwanese index, both of them lower as well. The big question, how will these overnight cues impact the Indian market? Our research team is always joining in with the Power Prep segment, the stocks that are likely to be in the news. It's also a Thursday, which implies that we have the weekly options expiry that plays out too. So, let's go across to Sudarshan first. Sudarshan, the weakness that we are seeing in the global markets, we've spoken about all of that. Is there a case that India perhaps, is less affected by all of that is happening by virtue of the others getting affected a little more?
Good morning, Mangalam. So if I can start with, if there was any hope for Trump to be kinder or nicer, as he had said earlier, those hopes got diminished within few minutes of his speech. When he started his speech, all the US stock futures were up around 1% or more than that. But as he started speech and started talking about tariffs, those stock futures were down in the range of 3 to 4%. And following those cues, GIFT Nifty for us is indicating start with a cut of nearly 300 points. But mind it, it has seen a minor recovery from the lows. At one point, it was down more than 400 points or nearly 400 points. But talking about yesterday's session, it was a good day of trade for us. All the frontline indices saw a healthy gain. Even market breadth was in favor of advance decline ratio at the close was in the ratio of 3:1. On the institutional flows front, FIs continued to sell. They have sold for 3 consecutive days. Yesterday also, they have sold more than rupees 1,500 crore, but it was offset by DIs, which have bought nearly 3,000 crore. And with this, FIs long exposure also saw an increase, and it's at 32%. And they have added long positions of more than 4,600 contracts, and it was a minor increase in short positions. Now coming to the option front, on the call side, 23,300 call and 23,350 call have seen healthy additions, and on the put side, 23,200 and 23,300 put have seen healthy additions. What does it indicate? Because ahead of tariff announcements, people did not want to take the risk. So there was in a very short range. That's the reason you saw that 23,000 call also seen healthy additions, and in the put side also 23,000 puts saw healthy additions. Now coming to support and resistance. For support, it's seen around 23,000, which is 50-day moving average. If it slips below 23,000, the next support comes around 22,928. That is 20-day moving average. Resistance for now is 23,467, which is 100-day moving average. Stocks that will be in focus, one sector that will be in focus is the pharma, especially stocks like Zydus Life or Aurobindo Pharma and Dr. Reddy's, because they have major revenue mix that comes from US. And now the news is US President Donald Trump has decided to exempt pharma from the reciprocal tariff. So keep an eye on these stocks.
Indeed, pharma will be the sector to watch out for. The tariff exemptions only for now. That's the important thing that you need to keep in mind. Sudarshan, thanks a lot for that. Over to Vamakshi now, who joins in with all the market cues we need to watch out for today. Vamakshi, good morning.
Well, good morning, Hormaz. Yesterday was a good session, but not sure if that would transpire today as well. Yesterday, market closed with healthy gains. The Nifty rose by 167 points. So did the Sensex, up nearly 593 points. The market breadth was firmly in favor of the advances. The broader markets continued to outperform the benchmark indices. All the sectoral indices closed in the green, with realty index leading the charge. FMCG, bank, IT, as well as auto sectors were some of the top gainers in trade yesterday. But when we look at the US markets, they too closed higher, but the US futures saw a carnage as President Trump unveiled his sweeping reciprocal tariff measures. The yield on the US 10-year Treasury too slipped along with other global bonds. When you look at the gold prices, the demand for safe haven naturally goes up. The gold prices too rose, but the oil on the flip side saw a bit of a cut. The most important cue to watch out today will of course be the reciprocal tariffs imposed by President Trump. But apart from that, keep an eye out on RBI's OMO purchase auctions of around 20,000 crores. US initial jobless claims will also come out. But again, all of this will be overshadowed by the reciprocal tariffs. As far as levels to watch out are concerned, there's a strong support at 23,000, 23,100. But we'll have to wait and see whether or not the index breaches this. As of now, when we look at the GIFT Nifty, it is indicating a gap down start to the trading session today.
Indeed, Vamakshi, thank you so much for that. What about individual stocks? There are a bunch of them as well. Upasna joins in with a list of stocks that one needs to watch out for. Upasna.
Good morning, Mangalam. Where it looks like a huge list of corporate developments that has happened overnight. First up, let us look at the FY25 updates. MOIL will be in focus as manganese ore production of the company has seen an uptick of 2.7% on a YoY basis, and the manganese iron ore sales has also seen an uptick of 3.3% on a YoY basis. Next up is PNB Bank. The global business has seen a sequential uptick of around 2% and 14% on a YoY basis, and domestic business has seen an uptick of nearly about 1.7% sequentially and 13% on a YoY basis. Now, ESAF Small Finance Bank will also be in focus as the bank's total deposits has seen an uptick of 17% on a YoY basis and nearly about 4% sequentially. And gross advances has also seen an uptick of nearly about 4% sequentially and 1% on a YoY basis. Now, Dabur will also be in focus on the back of its Q4 update. The company says that the FMCG volume trends continue to remain subdued for this quarter, and India FMCG business is likely to decline in mid-single digit. Dabur's consolidated revenue is expected to be flattish during Q4 FY25 is what the company has indicated. Hindustan Zinc will also be in focus on the back of its Q4 update. The company says that the mined metal production has seen an uptick of 4% and 17% sequentially. Maruti Suzuki will also be in focus as company has said that it is announced a hike of car prices across 7 models with effect from 8th of April 2025. And mind you, Maruti had informed earlier of this price hike on exchanges on 17th of March. Overall, if we see, this is the third price hike announced by the company in 2025 so far. Hero Motors will also be in focus on the back of its March auto sales. The company has seen total sales higher than estimates, up about 12% on a YoY basis. And Hero's Q4 sales, if we see overall, it has seen a decline of 1% on a YoY basis as compared to the growth of other peers. So certainly, Hero has underperformed. Bharat Forge will also be in focus as North America truck orders fall further in the month of March and orders are at 7th month low. BEL will also be in focus as company has signed a contract worth 593 crore with Indian Air Force. Tata.com will also be in focus as company has approved 16.71 million euros share buyback from ITC Singapore. And lastly, Macrotech developers will also be in focus as company denies approval of fabricated board resolution, and it has also said that House of Abhinandan Lodha, that is HOA-BEL entities, use fabricated board resolution for trademark use. So all in all these stocks will be in focus today on the back of the corporate developments.
Upasna, thanks a lot for that. Plenty of stocks to keep an eye out for, but particularly, of course, the pharma sector that needs to be watched out in today's session. We take a short break. We get you more updates on how Donald Trump's tariffs will impact other countries. Stay tuned. We'll be right back. Welcome back. And of course, the big newsmaker today is Donald Trump's tariff announcements, and global markets are reacting to this. We have Sanjay Suri, who is joining in to tell us more. Sanjay, thank you for joining in. What can you summarize from the statements made by President Donald Trump?
You know, there was a first proposal from Donald Trump that he will apply universal tariffs on all countries. That then moved on to his plan for reciprocal tariffs on countries. What we have now is a bit of both coming together. So there is going to be a universal tariff of 10% on all countries. That will be a 10% tariff on exports of all countries coming into the US. And on top of that, there will be a reciprocal tariffs. Under that plan, the US government has worked out a certain level of tariffs that country applies on goods from the US. Now, the US said it will apply half of that on that country, and therefore, for India, for example, the US has worked out that it's 52% that India applies as tariff on goods from the US, and so the US says it will apply 26% on goods coming into the US from India. So this is not quite as kind as it sounds. It's not as kind as Trump said it will be. This is a figure certainly that will be disputed, and with India and with many other countries. So this is going to just start off a whole lot of confrontations between the US and just about every country, and this is going to snowball into a major trade issue. It will be a problem that will hit countries around the world, but it will hit the US no less, and no doubt Trump will see the consequences of this also for the US in days to come and weeks to come, and they may not be quite as he foresees them or as he believes they will be.
All right, thanks a lot for that. So important one to watch out for here as well. The US trading partner countries reacted to the tariff announcements as well and vowed swift retribution. Here's what the Canadian PM Mark Carney and Australian PM Anthony Albanese had to say on the US tariffs.
We're in a situation where there's going to be an impact on the US economy, which will build with time. In our judgment, it will be negative on the US economy. That will have an impact on us. But the series of measures will directly affect millions of Canadians. We are going to fight these tariffs with countermeasures. We are going to protect our workers, and we are going to build the strongest economy in the G7. In a crisis, it's important to come together, and it's essential to act with purpose and with force, and that's what we will do.
The unilateral action that the Trump administration has taken today against every nation in the world does not come as a surprise. For Australia, these tariffs are not unexpected, but let me be clear, they are totally unwarranted. President Trump referred to reciprocal tariffs. A reciprocal tariff would be 0, not 10%. The administration's tariffs have no basis in logic, and they go against the basis of our two nations partnership. This is not the act of a friend. Today's decision will add to uncertainty in the global economy, and it will push up costs for American households. This is why our government will not be seeking to impose reciprocal tariffs.
We'll take a short break here on Power Breakfast. Up next, we'll take a look at how Donald Trump's tariff orders could impact specific sectors in the Indian market. Stay tuned. Welcome back. Just before we move on, let's pull up the GIFT Nifty and check if there has been any improvement from the lower levels. There was an improvement earlier in the show from a 400-point gap down. We were looking at a 260-point downtick on the GIFT Nifty, and it'll be interesting. So same as well. 275-point downtick is what the implied open is currently suggesting. But to summarize what has happened over the last few hours, plenty of news developments coming in from the White House, and what has Donald Trump announced here is just to summarize it, is the fact that he's announced a baseline tariff of 10% on all exports from countries to the US. That's the first basic announcement that he's made. And then he's announced an additional reciprocal tariffs on as many as 60 countries, which include India, China, Vietnam, and many other Southeast Asian countries as well. But Canada and Mexico, which were the first countries on which Donald Trump had imposed tariffs after taking office, have been exempt from any further reciprocal tariffs. There were indications made on this earlier as well that all three nations have been in talks. The products under the USMCA have also been exempted. So this is another important development, particularly for Canada and Mexico, and their currencies have reacted to these developments. Now, when do these take effect? Now, the 10% tariff that has been announced, that takes effect on the midnight of the 5th of April, and the higher tariffs announced, they take effect on the 9th of April, which is 12:01 a.m. So 2 dates for the implementation of 2 different lines of tariffs. Now, if you look at the country-specific tariffs that have been announced, take a look at this. China, 34% reciprocal tariff. India as well. We'll get to country specifics in just a bit, but take a look at the others. Taiwan, Japan, South Korea, Cambodia, Vietnam, anywhere between 25% to 50%. That is the reciprocal tariffs that have been announced. Now, for sector specific, pharma is the sector that you need to keep an eye out for because it has been exempt from any further tariff announcements for now. The administration will be launching an investigation into both pharma and semiconductors, and they'll come to a conclusion, and then maybe at a later date tariffs could be imposed on these sectors. But for now, no exemption on pharma. There is also no exemption. There is also exemption from gold, copper, steel, aluminum imports. They will also not be subject to any reciprocal tariffs as made by the announcements. But the automobile tariffs and the auto part tariffs that were imposed, that were announced last week, they remain in place. They take effect today. The 25% tariffs that were announced last week. Now we come to India. The 26% tariff announcement that has been made, this reciprocal tariff. In fact, Donald Trump spoke about India. He also mentioned that Prime Minister Modi is a great friend, but I told him that you are not treating us right, and hence we'll be imposing this half of the 52% that India imposes. So we'll be imposing half, which is 26%, is what Donald Trump said. And an official White House statement also mentions that in case the tariff barriers are removed, it will increase US exports to India by as much as $5.5 billion. Now that's the White House statement as well. When it comes to China, there were already 20% tariffs that were in place. Another 34% tariffs. Now that takes the total to 54%. And just yesterday, before the tariff announcements, China had already said that they are going to restrict companies from investing in the US. And so as a result of which, you could see the market impact as well. US futures are down sharply. The Asian markets are down sharply as well. And the GIFT Nifty 2 is indicating a very sharp gap down for our own markets as well, Mangalam.
Absolutely. The question is whether this, gap down will be bought into because of the relief that we've got on pharma. Also, the fact that we open near key support zones itself. How do these, tariffs impact specific sectors? Autos could be one of them. Sudarshan joins us back on the show. Sudarshan, from a sector-specific standpoint, auto seems to be most impacted here. What's your take?
So first of all, as far as today's announcement is concerned, it's a status quo for the auto sector. What do I mean by status quo? If you remember, last month, US President had announced that on auto and auto parts, 25% tariffs will be imposed effective April 3. So that is effective. So today, effective today, that announcement, 25% tariffs come into effect. Now, in the reciprocal tariffs that President has announced today, in that reciprocal tariff announcements, auto is exempt. So, but it does not mean that auto is exempt from tariffs. So earlier tariff announcements remain. Now, for an example, UK, for which JLR is the base. Now, on UK baseline tariff is 10%. Does it mean that on JLR 10% tariff will be imposed? The answer is no, because President has clearly mentioned that on all the foreign-made auto companies, tariff will be 25%. So on JLR also, the tariff will be 25%. Another positive thing, if I can say, products which are part of US, Mexico and Canada agreement will be exempt from tariffs. Now, because of that, 2 companies that might be in focus are Samvardhana Motherson and Sona BLW. If you remember, Samvardhana Motherson in its exchange disclosure last week had mentioned that their auto parts that they supply to auto companies, either those products are manufactured in the US or for other products, those products are part of US, Mexico, Canada agreement, and that's the reason impact would be very minimal of these tariffs. So factoring all these things, keep an eye on auto companies. I won't say there would be a relief rally, but as far as today's announcements, it's a status quo for this sector.
All right, status quo for this sector, so that is no further bad news. But on various other sectors, what could the impact be, whether there would be a relief rally, whether there would be a further impact? Vinny joins in with a lowdown on all of that. Vinny.
Good morning. So absolutely what we're talking about is the other sectors where we'll see the impact coming in. 26% tariff actually turns out to be a big impact coming in for some of these sectors. That is textile, footwear, shrimp exports, machinery, equipments, cables and wires also will see, because some of these companies have a good exposure to the US market as well as transportation equipment and any other sector except for the list that they've given in terms of an exemption. All these would see a major impact coming in. Do not forget, especially for textile, footwear, chemical products, food products, when you say shrimp products also, so stocks like Avanti Feeds, etc., Apex Frozen, all these will see an impact because they have a large exposure to the US market, and the differential rate in terms of the tariff, India was charging a much higher rate. Now, obviously, this 26% rate that comes in for the Indian imports will be a big blow for these companies. Chemicals specifically also is going to be seeing a big impact coming in. So companies like SRF, Naveen, Galaxy Surfactant, PCBL, they have a very good exposure and a big exposure to the US markets. So as of now, it doesn't turn out to be good for them. Previously, chemical companies, the existing import rate was around 3.5%. Now it's 26%. So significantly higher. But, Hurmaz was mentioning those rates on the other countries as well. So given other countries, whether you see a China, Japan, it's much lower, the India rate. So that is something that will still be a leg up on that front, but still a higher rate is something that turns out to be a concern. Exempt list, pharma is exempt as of now from this list. So that's a positive for pharma companies, and we could see a relief rally on that front. Other than that, semiconductors, copper, gold, silver, lumber, and energy products, these are exempt. So maybe that positive sign we could see coming in for these sectors and companies as well.
All right, Vinny, thanks a lot for summarizing all of that for various sector-specific tariffs as well. Now, President Donald Trump imposed a reciprocal tariff of 26% on India. Let's listen in to DBS Bank Singapore senior economist Radhika Rao, who spoke more on this front.
What you have on hand, or what is likely to come ahead, is the bilateral trade agreement. So under this bilateral trade agreement, there could be terms on India buying a lot more from the US. Like you rightly pointed out, it could be energy, it could be defense equipment, it could be, say, agricultural products. But I don't think it'll be a blanket one. I think India also needs to protect its own farmers and agricultural base, which is still the main employer in the country. And the larger aim of the BTA is also, to the bilateral trade agreement, is to increase the size of trade. US at this point is India's key trading partner. It makes about 17-18% of overall exports from India. So it's certainly a very important market. So I think that's why you would see this horde of discussions and negotiations that have been going on all the way since February. When we started off, when you do a back of the envelope calculation, most of us started off with the tariff differential. It is to mean that what India imposes on the US and US imposes on India. What you've seen now is 26%, which is almost more than 2.5 times what that tariff differential is, to mean that there are a lot of other soft factors that have been added in. Non-trade barriers, you've also seen currency movements, not only for India, for across other trading partners as well, which means that if there are, again, to my mind, if there are some concessions that are made, it could be that you could get a bit more discounted, tariff rate, and that would be a part of the negotiations that are going on. So I would think the window to lower this 26% is very much still live.
The window to lower these tariffs are still alive, and of course negotiations are ongoing as well. We take a short break here on Power Breakfast. Up next, we get you cues from the commodities market. Stay tuned.
Welcome back. You're watching us here on Power Breakfast. It's all about the impact of the tariff barrage of reciprocal tariffs announced by Donald Trump overnight. Has that had a bearing on the commodities? Oh, yes, it has. There's been a fair amount of risk off and also flight to safety. Manisha Gupta joins in with all the updates from the commodity space overnight. Manisha.
Thank you so much for that, Mangalam. Well, yes, there has been a huge impact, especially for the gold prices, which in any case had been hitting record highs. And overnight, as this statement was coming in, not too many markets were open, but we did see gold react to this in the international space. And $3,167 an ounce is what we've seen into gold prices as all-time highs. If you look at the gold futures, well, we've surpassed 3,200 therein. So very, very strong gains coming in here. The markets are more concerned about, of course, tariffs on India, but also tariffs on China, which have jumped up to or ballooned up to 34 and 54% now if you put the total in. And that has impacted the metal space very strongly. COMEX copper has seen a decline of 4%. We're trading at a 3-week lows onto this one. The global aluminum prices have seen a 2% decline. That one is trading at a 10-week lows right now. And that pretty much has been the case across metals. Most of these metals down the overnight markets. Also has seen a bit of a decline come in has been the crude oil prices. It fell 1% yesterday. It is down 3% right now on concerns of weak energy demand. While, of course, the list of goods not subject to reciprocal tariffs has been a bit of a support because you have steel, aluminum, copper, and bullion. Bullion means gold and silver. So clearly, gold and silver are exempted from these tariffs. And then any import of oil, gas, refined product has been exempted into U.S. But the rest of the world will see demand concerns coming in, and that's exactly what the commodities are reacting to.
Take that point entirely, Manisha. The commodities reacting to that. We are seeing some bit of a relief in gold and silver, perhaps some flight to safety as well, but a decline in Brent and some subdued performance of the dollar index overnight as well. Before we take your leave on this edition of Power Breakfast, just a quick recap of the Asian markets overnight. We saw a big gash in the US futures. The Hang Seng's opened with a cut of almost 1.5%. Now that's accelerated to about 1.9%. The tariffs on China a lot worse than on India. Nikkei was down about 4%. It's now ameliorated its losses, now down by just about 2.95%. The Taiwanese index is obviously shut for trade today. And we wrap up with GIFT Nifty, which at one point was down by about 400 points and now recovered with a cut of just about 250 points. But you don't go anywhere. The all-important Bazaar morning call comes up right after this short break.